Good morning, everyone. Welcome to the London session on TopstepTV. If you're here for the first time, my name is Deeyana Angelo, aka Market Stalker D, and I'm a Series 3 licensed trader. I've been doing this for 18 years now. So getting old, guys, getting old. So congratulations to everybody who made it to my VIP team. How exciting, right? I really enjoyed seeing who's in yesterday. Do follow me on Twitter, but obviously we're going to have a lot of interactions in the Discord. Maybe we can talk about some objectives there and what the plan is going to be. I see that Stefan D is in here, so he's one of the people who made it in. So big congrats for that. I'm really looking forward to working with you. Now, my coaching style is obviously known to the people who have worked with me in my private coaching service. However, that is more geared towards the review of each individual trader plan. So I tend to keep those very small so that I can give enough attention. And the group coaching session obviously cannot be that detailed because we cannot go through 50 individual trading plans with extremely detailed breakdowns of what you're planning on the day, what your hypos are. You know, it's obviously a slightly different exercise. But it's going to be all about making sure that you are able to pass the combines using good trading habits. Now look, good trading habits, in order to make something into an autopilot behavior, does take nearly a year. Like, I know there's this myth floating around how you can build a new habit in, 31 days or some arbitrary number. That's not true. In order for your neural networks to really connect, you need to be doing something on a near everyday basis for about 264 days. So obviously, if you have some issues with discipline, when it comes to trading specifically, that's generally related to the fight or flight response rather than discipline itself. It's basically your brain just trying to survive if you get yourself in a loss. So knowing how to disrupt those behaviors and how to sort of get around them is almost like a life hack that can work in your favor, even in other areas. So we're going to be talking about logistics of passing combines, maintaining your accounts, making sure you're not breaking your plans. And for that purpose, we are going to have Anne-Marie collating and aggregating the data and some of the bits and pieces that all of us coaches will be talking about in the private groups, and then trying to help you to implement that to the best of your ability. Now, obviously, I have some techniques that will help you push over that hump. So don't freak out over like, oh, we better make Dee proud. It's not about that. It's about you. It's not about me. Okay. So if you're going to make anyone proud, make yourself proud, right? Even a bigger wow, right? Now the ball is in your hands. But I will do my best to keep you on track. And obviously, if you're doing something muppety, I'm going to pull you up on that. So, don't expect me to pat you on the back if you've done like 50 trades in a day and you hit your daily loss limit, or even worse, your max loss limit, and you're staring at a reset, because obviously I'm not going to be very happy with that. But yeah, so that's basically the name of the game for the next few weeks. Let's see how you're going to behave. So you better behave. Otherwise, I'll be getting some shot collars for everyone for Easter. So negative reinforcement. Just a joke. All right. Davey Edge says, I thought it was going to be only girls on your team. So we weren't able to do that this time for the simple reason that there was no box to say, yes, I'm a girl, I want to be on the female team. So next time around, because I spoke to Danielle about this, next time around they're going to have that option. It's just that, I know I kept saying it, but I'm not sure how many people were actually listening to the main broadcast. We have been broadcasting for well over a year now, and, not everybody is watching all of the segments all the time. So obviously I was yapping on about the female team, and kind of floated the idea for probably about a month. But it just was, no one was thinking that they were going to implementing that. And to be perfectly honest, I'm not even sure that I wasn't sure that I wanted to be a VIP coach, because I was like, well, how's that going to work? I had a lot of things going on in my private life. And at that point, I didn't know what was going to happen. We had this sale of the house, and then a couple of offers that fell through. So I'm like, oh God, these viewings are just totally putting a wrench in the works. I couldn't really commit to any particular schedule. Now, hopefully that part is getting sorted out. Not yet, because we just had the surveyor in yesterday. So I will know more in about, probably in about a week's time. But if everything goes well, then, we should be doing contracts and making the move to the countryside, which means that my schedule will be fairly flexible again. So let's see. Bruno, can you deal with Colin's trades? Because apparently he's calling this a Ponzi scheme. He obviously doesn't quite know the definition of that. Phoenix AVS. So because we have a team communicating with the traders, we have Anne-Marie, who is the, how do they put it? The VIP consultant, I think was the official term. She will be in charge of communicating all the links in the email, the Discord groups. I don't think they even created my own Discord group just yet, because I am on Discord, but to be perfectly honest with you, I hate generalized Discord groups because I find them very cancerous. There's a lot of spam. You post one comment and suddenly you get a bunch of trolls in there who are all George Soros's and Warren Buffett's of the world, and everybody knows best, and all of that stuff. So I just hate that kind of negativity, and I try to stick away from that. It's the reason why I've never created my own personal, business Discord group, because I just don't like that sort of interaction. And I think I'm going to carry over what we're doing in my private coaching to a degree into the VIP group on Topstep as well, which will mean, having a dedicated, I need to think of how I'm going to do this, because I do want to dedicate my time to every person that's active in there. Now, obviously there's 50 people. I don't really expect that all 50 of you would be like super active. And even one person on there had the handle not on Discord. So I'm like, yeah, mate, how's that going to work? So you sign up for a VIP team that are all run on Discord and yet not on Discord? Okay, cool story, bro. But yeah, so whoever is active, I'm going to do my best to provide a personalized service, and we can have a look at your plan for the day. We can look for, what's happening in your given market. But, there will be different trading styles. You're not coming into the VIP group to learn the market stalkers method, which is what I do in my personal coaching. You're coming into the VIP to get better at what you're already doing. And believe it or not, every one of you, even if you're not successful at maintaining, XFAs and passing combines, you still have points that you are doing well on. So that's what I'm going to be looking for in your stats, and we are going to be getting your stats. Scary, right? So we're going to be looking at your stats and what you're doing, and then trying to implement the stuff that I'm going to be talking about in the group, right? If you're not following that, we're going to have to take some active action in order to see how you can start following your plan. Maybe maybe you have something that's unrealistic. We see certain people who are like, oh, I want to make 1,000 a day. That's great. But have you ever made 1,000 a day, like for 2 weeks, every day, or, most days? And if not, let's have a look at your biggest winning day. If your biggest winning day was ever only, 200, you've got no business shooting for 1,000. Like, you're far away from that goal, but you don't need to. That's not like having some stupid, monetary goal in your head is not the way to get it. So maybe what's hurting you is that you're constantly chasing the 1,000 instead of the 200 that you know you can get, like statistically looking at your historical performance. Just, things like that. So I love playing detective with my trader stats because I'm like, let's see what you actually did. And, if I have time, if somebody is not doing like 1,000,000 trades per day, I might even have a look at the individual trades that you've done, talk through that and see whether we can make it better. So, there will be things that you can improve even if your day ended up down or even if your week is down. There are things that you did that were right. So let's fish for those rather than focus on the negatives. And, even if you have a down day, did you follow your plan? So why focus on the negative if you've done everything right? You didn't overtrade. You followed your personal daily loss limit. You didn't do trades away from your levels, but the levels just didn't work on that day. Now, that's a good trading practice. There's nothing wrong with having a bad day if you followed your rules. So, all of that, I'm going to do my best to support you in this beautiful journey that we're going to be going on together. All right, let's see who's around and let's see some questions if we've got any. So if you've got any questions, throw them at me, no problem. Obviously hit the like, and if you're not subscribed, click subscribe, and you may even want to check out my channel because I do have a YouTube channel that I've been running since like 2015. Didn't really take it seriously up until about 2021. And I have slowed down the posting there just to kind of think through what I need to do with that channel. But yeah, check it out. Loads of videos on there that might be helpful and might be a good starting point, actually, whoever's in the VIP group. If you don't quite know what I'm all about and you manage to end up in my VIP group, that could be a good starting point to see that while I am a very serious coach, I also like to throw in a lot of humorous stuff in there just to make the whole journey a little bit lighter on everyone, because trading is fun. Trading should be fun, and banter has always been a huge part of prop trading. You go into a prop trading office, it's not a bank. It is banking, but it's not a bank. You go in there, no one wears a suit. Everyone's pretty relaxed. Everybody comes from very interesting backgrounds. You're not going to find dull people in a prop trading office, that's for sure. And everyone's a character, big character who usually we don't like being in regular jobs. And that's why you choose a job that has a lot of uncertainty with it, but also no ceiling to the amount of money that you can earn. And you largely set your own hours. Like when I was working in office, sure, you needed to be there. But if you made money on the day, like, if you were up like, 10, 15 grand on the day, they would just go, all right, goodbye. Like come lunchtime and you're done. The risk manager would actually send you home, especially if you're known to give things back in the later part of the day. Now, the way I traded, I always traded after lunch, especially, over on Chicago hours. So I was just like hanging around all morning. I would go to the gym, I would go have lunch, then come back, look for my setups, and, that would be my day. So, yeah. Christian actually has a good point. He says, excellent driven, ego driven. Yeah. I would agree with that, because if you are a perfectionist and trust me, I am a perfectionist, right? And that's worked against me in trading before until I learned that there's no such thing as perfection in trading. And then things became a lot easier. But yeah, if you are goal driven, especially like if you are money driven, that can work against you because it is a goal that will mess with your head. So I try to stick away from any monetary goals. You can have a perfectly brilliant day. Like this probably would apply a lot more if you're in some kind of a drawdown and you are trying to claw your way out of it. So the only thing that you're supposed to focus on there is just ticks, maybe points. Forget about any monetary targets. Have a look at the setups. Have a look at what the day is offering you, because we never know. We don't know what sort of a day we're going to have. Like I'm looking at this gold. There's some buying above the call strikes that are pretty meaningful. So maybe that indicates some call buying. That's not a short, that's for the longs above that strike, right? So, but I don't know whether this is going to be a trending day. I don't know whether it's going to be a neutral day type or something in between where we maybe extend the initial balance, but we don't go far. That can happen. And in many ways, those are difficult days because you don't have clear setups. You're like, well, we try to go higher, we distributed, but it's still not going higher, but it's not going lower either. Like, now what? Then you put on your Dolby hat and you trade ranges, right? So there are ways to make money in every sort of a market, but we do not know. Ultimately, nobody knows what's going to happen. I don't have a crystal ball. Nick for a Tick doesn't have a crystal ball. Dakota doesn't have a crystal ball. We rely on probabilities and generally either a high accuracy or a high risk reward to make things work. Now, which one of those you're going to be is mainly down to the personality, but also the skill set. I always think that people who can be super selective, we have Paul H in the chat here, and he is extremely selective. Okay, he's extremely selective and holds his trades all day because of the trade location that he looks for. Now, I'm kind of similar, but I'll be honest with you, Paul, I cannot hold a trade for 8-9 hours intraday. It would I would just go insane because I would keep coming back to the chart. Like, if you can just leave it alone and stuff. But that kind of reminded me too much of when I used to be a swing trader and I always had one eye on the market. So I don't really like that. But I like sort of the golden middle where I hold my trades between sort of 45 minutes up to about 2 to 3 hours, maybe 4 hours on some occasion if DAX is not a particularly nice trend. But generally, my average hold time is about 45 minutes, right? That's not to say that I won't do a scalp that only lasts for like 5 or 10 minutes. Like, we've seen me do that R-ball like a few days ago. And that was only, a 20-minute trade, like 30 minutes maybe. And then I cut it, it's... doesn't have to be long. It depends on the time of day. It depends on the speed of the price velocity and stuff. But if you are that kind of a trader that you can actually hold things for a long time, for a big 5R, you can afford to make a lot of mistakes and your system will be extraordinarily stable and you've got a great career ahead of you. And I always think that's a bigger skill to have, right? To be able to call those locations to such a degree reasonably frequently, even if you're wrong a lot. Like, I'm wrong about, usually about 60% of the time, maybe a little less than that, let's say 57. But yeah, I'm wrong a lot because of I want those big moves. Maybe not 5R, but I definitely look for 2 and 3Rs, right? And that means it's a special kind of trade. You're not going to have 50 trade setups in a day doing that. However, you can have people who are completely the opposite side, right? You can be completely happy trading NASDAQ. Now, NASDAQ is a different animal, right? On NASDAQ, if you're a NASDAQ trader, I don't mind seeing negative risk rewards as long as it's not like terrible and close to like zero. If you have like, 70% accuracy, but you're only making, 0.1 R every time. That's a problem with the system design. So we're going to talk about system design as well as we go forward into my VIP group. But, I would have no issue seeing NASDAQ traders that have 70 to 80% accuracy and about 0.8, 0.7, 0.9 risk reward. That's a winning system. If you can hold up that, I have nothing wrong with that. But just don't do a million trades. Because from my experience, the best scalpers in the world are not the old market maker style, make one tick here, one tick there. Back in the day, the markets... They were not this liquid, right? You didn't have mad trending days that go for 1,000 ticks. It was a lot slower. The S&P pit was much, like S&P full S&P is not 12.50 a tick. That's like $50 a point. The full S&P 500 before the minis came out was 250 per point. And, that's big. It's very expensive. So if you got a tick here and there, that's fine. But then you get a tick, how much is your round cost trip? You have to add all of that up. So the less ticks you take per trade, the more effect the round trip cost and commissions will have on your profits. I hate that. I don't want to give brokers, money. It's like, you've got enough money as it is. I want money for myself. So I would always prefer to see people who have slightly higher risk rewards, even if it's like just over the hump of like statistically viable of 1.3. And then you can sort of float in that golden middle of like 50-60% with 1.2, 1.3 R. That's still a winning system, but just be careful if you start to dip in accuracy, that's when you start bleeding money. And that's the problem with high accuracy over high risk reward, that you have to absolutely maintain that accuracy at all times in order for it to work. This is where we see the scalpers that have made a ton of money on a lot of size very quickly, and then they start bleeding money because suddenly they're not, their system isn't performing well over time. Time is the only ultimate judge of what you're doing. It's not whether you can make 40 grand in a day overnight, right? If you cannot maintain that, and if you cannot keep doing that for 3 months, 6 months, a year, 2 years, 3 years, and you keep losing accounts, that's not great. I'm not going to be impressed with that. In fact, I'm going to pull you up on that. I'm going to be like, well, you're a muppet, just size down. What the hell are you doing? So I have a very different approach when it comes to being a coach rather than being an on-air personality where, I'm trying to make everything entertaining and, we're focusing on the real-time movement of the markets and explaining what's happening with levels and stuff, and then trying to throw in some banter and jokes in there. When it comes to coaching, I'm very serious. I will throw humor in there to kind of try and drive a point, but yeah, I don't really take well to people who are not listening and not taking action. So that's all I'm going to ask of you, to take action based on what we talk about. That's all you need to do as a mentee, as a VIP trader. All right, so let's go over some questions here. Christian says, Coach Dee, any trading psychology book recommendations? One of the best ones is probably Mark Douglas's Trading in the Zone. It is a favorite of most traders that have done this for a hot minute. So I would highly suggest that, because he talks about losing money of his own, but then being in the environment where he was still a broker and he was able to suddenly start looking at the markets quite objectively. And he puts down some big sort of epiphanies and truths that he came by. So definitely read that. And then another one is yet another one of the trader's favorite is Tom Hugard's Best Loser Wins. He's an awesome guy, right? I don't know him personally, but I know that... So we have the other prop firm, Trade Day, and they actually work with a psychologist that knows Tom Hugard. So I kind of sort of know people that know him because he lives in the UK as well. And every time I look at his seminars or, his live streams and stuff, he's an awesome dude. Like, he has a very positive mindset. He's a no-nonsense kind of guy. And he talks about being hopeful in a drawdown position, but being fearful in a winning position. Now, that is something to take away from his book. You need to change that. How do we change that? By deliberately practicing those wanted emotions and fighting against the unwanted emotions. And there are ways to disrupt those, through like some biological processes and stuff. It's not easy. It's probably the toughest thing you will ever do, to stop yourself from feeling something unwanted. But, we are just basically biological machines. And once you learn how that works, you can actually control your mindset pretty well, even in the most stressful situations. I'm a big student of psychology. I'm not like a professional or anything, but I was interested enough seeing how my development went. And when I started doing stupid things, I'm a nosy person and a nerd, right? I know that I don't look particularly nerdy on most days, but I am a nerd. I know how to code. I was a big music nerd. You don't get to a level where I was in music without being completely obsessed with what you're doing, foregoing social life. I was only a young person when I started my session career. And I didn't care about parties. I didn't care about going out. I didn't care about any of that. I cared about getting the phrase that Kenny G was doing really well. Stuff like that. And then I would get totally obsessed. And no, I'm not ADD. I don't have any sort of disorder of that kind. But I do have an obsessive personality where, like, if I'm interested in something, I do focus all of my attention to that. So if anything is the opposite, right? I get locked into things. I don't lose focus. I actually have extra focus for things that I really want to crack, that interest me. If they don't interest me, I'm terrible. I'm just like, yeah, whatever, mate. But I do have a lot of respect for anyone trying to tackle psychological issues. Because again, it's the most difficult thing ever. It requires a lot of introspection, a lot of self-awareness, and I believe it will make you into a better person going forward if you can tackle psychology of trading. It's definitely transferable to other things in life. I just want to say, I know that on Thursdays we usually have Coach Ray around, but it is his VIP draft team. Now, he is in Northern California, so I know that that's going to be very early for him. So I had a little chat with him last night. And I said to him, look, you don't have to appear. I would like to be well rested for your draft, because we do have to do a little speech and what's your objective going to be and all that. And we just decided that we're going to leave it until next week. So unfortunately, most top steppers are usually asleep at this time. But maybe we can get Jerome or someone to come here if Jerome is around. Yeah, maybe we can work on getting some of the more European peeps, hit up Tim Mitchell and then, see whether we can sort something out so we can have a guest. I would love to have a guest. All right. So, yeah, that's psychology stuff. Let's have a look at another question. Best DJ in town. Deeyana, how do you learn to trust yourself and take a trade when your analysis say it is the right time to take a trade? Data. So your confidence needs to come from data first and foremost. I like to use when I'm teaching people my methodology. And again, just to reiterate, the VIP coaching is not going to be that. It's I'm not going to be pushing my levels and going, yeah, let's go along. Like, it's not a signal service, right? You need to make your own decisions, obviously. I'm just there to kind of guide the rest of the process, make sure that you're not drawing down too much money, that you're not going full ports on the first day of the combine, that you're not blowing through those resets that they are giving you as a part of the experience like crazy, and then to be out like in 3.5 seconds. So I want you to last in the program. But trusting yourself and developing confidence has to come first and foremost from the data. So what have you observed? Which setups have worked for you personally best? Because you can have a level that works out, but you're not terribly good at taking it, right? I think that's what you're talking about here. So you say there's a trade, like let's have a look at like maybe a live example. So we have a potential failed auction in gold. Now gold is rolled to a new contract. We are in April. I locked myself out because this morning I woke up in a lot of pain. Like yesterday was terrible as well. I don't know what it is. Like it was like day 3 since the fall, and I just felt never worse. It was disgusting. So I had to take a lot of meds, and this morning I woke up in a lot of pain again. So I'm hopped up on a lot of painkillers and muscle relaxants. So I just don't want to be trading when I'm, sort of half high, effectively. Yeah, what's that song by the rapper that everybody's throwing at me since the Chameleonaire draft, about potentially having contraband in your car, and you don't. So yeah, I obviously don't want to trade when my mental side is impaired, and I know it is, right? So that's another side of psychology. If you're a bit hungover from the night before, and I know some people will be, I don't personally drink, and if I do drink, I have like 1 or 2 drinks. Very, very rarely do I, go over like a drink per night. I just don't like it anymore. I don't know. But yeah, so if you are looking at a setup and you're not fully emotionally there for whatever reason. Maybe it was something like you had a fight with your partner, or your dog annoyed you, or something happened, or you're a bit sick, you feel a bit under the weather, right? Just know that your trading decisions are not going to be good. So emotional scan before you try and trade would be the first step. Now the second step is data points. So what do we have? First step, initial balance. So this is how you would decide whether there is a setup. Now, mind you, I have quite a lot of stats in regards to failed auctions that go with the trend from particular levels. If you don't have a level, that all becomes a little bit more dodgy. But here is the initial balance, right? So what do we have? We have a very tiny failed auction where we just popped a toe outside of the initial balance, seemingly went back. But then I also have this gamma wall that we went over. So we're holding calls and presumably seeing some more call buying. I'm not looking at intraday gamma flows, but this is what it generally looks like. It's that sort of passive buying that keeps going. Another thing is that we are quite far away from VWAP. So my rules on the failed auctions say that usually we have to have a relevant level around before we're going to do a failed auction. Do I have a relevant level on the opposite side? I do not. But that invalidates the failed auction. So my data points are telling me this is not a valid failed auction setup. Okay. What is valid? Potential for further upside. Whether that happens now, that's another matter, because this is not the main session for gold, and typically around about the London time. I know everybody's like, oh, London trends, but it doesn't really, like Asia trends. Like Asia is known for buying gold. Like they love doing that. So anytime you see a long gold setup, I would be more inclined to take that in Asia. If I could just forego sleep completely, that would be my choice. For gold in particular, and Nikkei obviously. But for London, I don't like gold. I like all of the days that I've spent observing how gold behaves in London. It's not reliable. The trending days during London on gold are not reliable. They happen about, if I look at 8 years worth of sample size, it's like maybe 40% of it is trending days. And out of that, maybe about 8% of them were in London. It's a terrible stat, So I'm looking at a probability of a trending event during London of 8%. Not what I want to get involved with. So I like to trade gold more during its main session. So if I'm going to look for a failed auction of any sort, it's going to be two things. This is how you develop confidence. Now, you can use flowcharts for this, right? Like you can visualize it. Don't keep it all up in your head. That's the worst thing you can possibly do. If you're just locked in, it's like, is it time? Is it time? It's like, yeah, no one knows, right? But if you externalize it, if you, just use a very simple mind mapping sort of brainstorming thing. Let me see if I can log into the one that I use. I think I use this Google account. Ow. Christ. Stupid shoulders really causing me trouble. I just found some of the mind maps I was doing while I was studying for my Series 3. That's quite funny. Okay, so this is a little bit more data, because it kind of does things that I'm looking for in my methodology, and it might be a little bit over people's heads. But I was looking at Nikkei and just trying to figure out what setup I observed. So this is how I would go. So NKD failed auction London from ES backtested put support HVL, these are mental Q levels, as well as HVL 0DT. Value acceptance long also completed, no ASR ADRs around, and daily bearish engulf, and this is like larger time frame pictures. So all of this, but with the mind that this would be your driving factor, right? So put something similar in your analysis of the setup. Don't keep it in your head. So just go okay, what am I seeing? What are you actually seeing? And see how many times those setups appear. And then you aggregate that data, and that's the first step to confidence building as a trader. I know that we have more discretionary traders. The code is very discretionary. I can't make that work for me. I need to have stats. I am a statistician. I didn't go to PhDs and masters for that like Anne Marie did, but I would say I'm an amateur statistician because I love data. I love looking at time series stuff and, like spreadsheets. If you were watching Linda Raschke say that she's not very detail oriented and she brings out like this massive spreadsheet. So that would be kind of me. It's like I am detail oriented and I love looking at numbers and data. But bizarrely, I'm not a huge fan of math. Like there's outright math that doesn't have an applied thing to it, like why we should do it. Just pure equations, naked equations that mean nothing. I just lose interest very quickly. But if it's an applied math, like physics or something, I really enjoyed that. And looking at time series data, analyzing levels, it's kind of a blend between remedial math and pattern matching. And to me, that's perfect. I love doing that. So you need to, like, if you're not into analytics and you want to make trading work, you need to get into analytics. Like, it needs to become your jam, right? This is why somebody who's an engineer might do a bit faster and better than the person that's coming from a more regular background, because they will already have those skills to collate complex sets of data into a readable, actionable skill, right? And that's what you're trying to do with the mind maps. So you're trying to see your setup, how many times it happened, and then go into observation mode. Don't trade it for the first few times. See how many times it happens. Obviously, with intraday setups, we need something that is almost every day. Like my setups, I have, let's say that I have about core 7 setups and then about 20 different, literally 20 variations of those setups. So all in, I'm probably looking at about 21 setups, right? Like for every market state. And I know that when I'm trading, one day I might look like a mean reversion trader. And there was a day when I called a range bound trade in crude oil. And back in those days, we were still kind of sort of popping into crude oil and trading alternative markets as well before they got completely obsessed with NQ. And me and Dolby actually did a smashing trade in range bound trades. We both saw the same level. We both saw the same development. And then I basically called it. We sniped it off the bottom and it went for through to 3R multiples all the way rotated to the other side. So MP after the stream goes, "Dee, you're a range trader." And I'm like, and I said, no, I'm whatever the market wants me to be, because at this point I have the skill to do so. So I will be, one of the reasons why I chose the chameleon as my company mascot, as my channel mascot, and as the name of my my team is because in a way I am a chameleon that way. I will blend my style and use the appropriate strategy depending on whatever the day gives me, okay? And that makes me a bit of a chameleon. But chameleons are also ambush predators. I don't know whether you know this. Everybody who I know in trading, they're like, let's have a lion. And a lion has a 30% success rate. So, when it hunts. Chameleon, closer to about 80%. Because it's an ambush predator, right? It just sits and waits, doesn't chase actively, it just waits for the fly to come by and just goes, bleh, and that's the lunch. So that's what we want to strive for. We want to wait for our prey to come to us rather than to chase. Basically, chameleons it means twofold. So ambush predators and also being able to mold yourself to the environment. So until you can do that, it requires a lot of time, by the way, to actually find all the market states, live through them, forward test them. Forward testing, if you don't know what it is literally sitting there every day and aggregating data in real time. It takes a long time. But, after 18 years, I do have... actually, just the other day, we were packing up some stuff. I found my notes from when I was going through my first ever apprenticeship, and it was whole bunch of papers, like how euro reacts to China numbers, how ES reacts to this, how ES, like a whole bunch of macro stuff that I suppose seeped into the back of my brain at some point. And I do kind of think about that, but at this point I'm not even like aware that I'm doing that analysis. It's like a bizarre autopilot thing that's happened over the years. And hopefully I can get you to do that as well. But you have to start by writing things down, step one. Like there's no way around that. And visualizing the data that you see and externalizing it. You know, one of the great things about having a coach is that you get to, obviously a good coach, not like some random dude off the internet that you don't know who he is, and just because he's got a Lambo, you go with him. That's usually not a good mentor. Like you need somebody who has some sort of credentials. You know, one of the reasons why we all went through Series 3 is to prove that we know what the futures markets are for. And I've seen certain influencers that make fun of that and, you know, Photoshop certain things. It's like, well done, mate. You know, slow clap. You're just bashing on people who are actually getting professional qualifications in the industry that you're in. It's like, imagine again being a doctor and mocking people who have got like actual medical school or trying to be a doctor, but you're like some kind of a healer. You're not calling yourself a doctor, but you're a healer, and then mocking all of the people who are actual doctors. Would that be okay? Probably not. But for some reason in this community, a lot of people applaud that sort of behavior. I don't. I think it's a bit silly. And it makes people look very immature and petty. But, you know. All right. So start by data aggregation, right? That's your first step. And from there, go into walk forward testing. Obviously, back test first. Always step one, but don't over optimize the backtest because that's never going to work. And then once you have some basic data points of what you've observed, how a level works, go into walk forward mode. Get a combine or just a challenge, just what's it called, practice account, right? And see how many times that event happens. Don't even enter a trade, just observe. Once you've observed it enough times, go and analyze how the price did that. Like, was it a 5-minute signal? Was it a 15-minute signal? Was it a 30-minute? Was it a 100-tick chart signal? Was it a combination of those? You know, track multiple time frames. See how it actually looks when the event happens. Is it breaking higher highs? Is it creating a megaphone pattern? Does it have, you know, bullish or bearish engulfing? Is there consolidation prior? All of that can go into your analysis. From there onwards, once you've observed, once you've tested, once you've tried a few trades, that's where the confidence grows. That's how you learn to trust yourself. By trusting the data and trusting that you've had enough of a sample size to now be pretty skilled at this setup that you're seeing. You know, one of the reasons why I'm so confident in my day range fill setups towards the end of the day is because I've seen them play out over and over. That's an event that usually happens like the post IB reversals are also pretty high probability. They're about 77% in crude oil, but towards the end of the day, they're a little bit less than that. I would say that they probably occur about 55%. So there is an edge, but there's a particular set of circumstances that need to happen around it. So it's a lower probability trade, but when it does happen, it's a big mean reversion trade, right? Works better on a neutral day type than a single trending day, but it can happen on a single trending day too. So yeah, it's all about data. It's all about experience. That's why we say experiential learning. That's what we mean when we say that. So try and establish a good process. Here we go again with that word, right? Process. Process over profits. Never ends. But yeah, the only way to develop confidence for me was to rely on data and how I'm observing things in the market. Once you've observed something a million times, your brain just learns what to do, right? It's almost like an automatic thing. But you have to work on it. You have to actively, deliberately set the process in place before it can become an autopilot version of yourself. There's that meme, the South Park memes, and it's gone. So, for example, there was one about you thinking about going to the bank after work, and then that meme and going, and I'm home, because your autopilot takes over and you're just not thinking, and suddenly you end up somewhere else, right? You end up home instead of the bank, and you're like, damn it, I took the same turn that I take every day. Why? Because autopilot behaviors. I want you to have autopilot good behaviors as a trader. Right now, many of you probably have bad behaviors on autopilot because you're like, I lost, I go into another trade. No, the good behavior would be to stop. So let's make that into an autopilot thing. You lose and you go hands off, breathe, wait, write things down, externalize. Don't just click buttons, And yet, what is the reaction of most people when they lose the first trade? To go into another one. You need to stop that. So, bad behaviors are definitely easier to develop because your brain learns from them, particularly on the days when that works. It's like, oh, you got hit on one and then you get lucky on the second one and it works out. That's not data. That's just like impulsive behaviors that just told you, quickly, it's a death threat, run. and you click another button and it works. And then your brain learns, hey, when I lose, I click another button and then I win and then I'm safe. We're back to comfort and safety and like nice sort of warm and fuzzy feeling. It's like, no, that's going to work against you. So in a way, we have to work against everything that we know and have been a learned behavior since we were like, yay, hi. We have to deprogram some bad behaviors that are a result of fight or flight and survival instincts and work to implement something else. We are oddballs. Traders are all weird people. None of us are normal. You don't do this job and go, oh yeah, I have a completely normal way of looking at things. No, we're all slightly outside of the norm, going against the grain, not wanting to do what the rest of it's like a weird flex, right? It's like, oh, I can do something that only 2% of people in the world can do successfully. Yeah, you have to have a particular mindset to really stick it out. And to me, it wasn't even the money. To me, it was like, I really want to learn how to do this. Like it was just such a big puzzle that my brain was just kind of salivating over. And I needed to know everything about anything, and I wanted to learn how to develop the situational awareness and to be able to have these like great skills in every situation. And I can tell you, it took me 9 years to get there. It wasn't like, oh yeah, I started trading yesterday. It was like 5 years of swing trading and then another sort of 2 years of learning profile, then matching what I already knew from my average daily ranges and times of day and observations I've done over the previous 7 years, and then another 2 years to make that consistent. It was a long road. So hopefully I can kind of cut that cycle and that length of time through coaching, and that's what coaching should be, just a shortcut to what the mentor already went through so they can tell you what mistakes they made in order for you not to make them. But I know that, rites of passage in this line of work is to make your own mistakes. It's just that don't keep making the mistakes over and over, and that's when a coach can be really helpful, right? When you are doing something over and over and expecting a different result, we can just step in and go, hey, let's not do that. Like, don't say that. Like if you were watching Mick from the wrist team yesterday on Shoulder Tap, JD said something that was quite funny. He said, if you're down to like $500 in your trading account, just go like full port, close your eyes for 20 seconds to see what happens. And Mick was like, don't say that shit, man. Like, stop it now. I just thought it was very funny. Like, you can see Mick's personality a lot when he gets really annoyed with some stupid things that all of us have said at one point or another, but he really doesn't like it. Like, he's so risk averse. You can see why he's the risk manager. And yeah, it was quite funny. All right, more questions. Charles Memphis Zofke, mortgage expert. Okay, coming to us from securities. All right. Seems like Q nodes are very close to fib. Yeah, Q points. Why don't we use fibs once initial balance is established? So are you hold on? You're talking about my Q points, or what are Q nodes? Am I reading that right? So if you can maybe if you're still in the chat, so let me know if you're talking about Q points or like what are Q nodes? I don't know what Q nodes are. Maybe I missed something. I don't know. Like I don't know everything, so that wouldn't be it. I mean, is it like a blockchain thing? Like what is that what you're referring to? Yeah, so let me know. But yeah, so fib levels, some of them do work. Like I have if you're not talking about my concept, I do have a concept that is called Q points, and it is sort of based on very simple quartile partialing of levels, right? So for example, I am looking for an established high, established low. Once it crosses over the 50%, 50% doesn't mean anything to me, but once it crosses over it and gets to those extremes, if we are in some sort of a range-bound condition, I will look at the top Q high and Q low, so bottom and top quartile, in order for me to see whether there's a trade there. And then I try to match that with the intraday setup. But yeah, fib levels are similar. I just don't see why we're complicating things with like 67.2 and 38. So I just noticed that the simple quartiles work just as well. So it's like, okay. And I use them to exclude some of the zones that are kind of middle of the middle. So especially if I'm doing swing trades, I do not generally like getting involved in the middles, unless there's an ultra strong trend of some sort, and then we can kind of bank on the trend, not going through that larger time frame demand zone, for example, if it's an uptrend, and acting as kind of a barrier to further moves down. But in all other situations, like crude oil likes to range a lot, so really focusing on swing extremes would be the best, even on larger time frames. And even if you're going to do options, in fact, crude oil for me is now just options. Like I don't have any desire to trade it outright because it's still very slow. I think it was CL Trader yesterday in chat who was saying that he was doing very, very good when crude oil, because I said I wanted to over 200 ticks. And he said, yeah, when I was doing well in crude oil, it was around 220 ticks range. So that's what we would need from crude oil. Aside from that, you can just use options to express your views instead. It'll be a much better way of doing things. So I don't use fibs once IB is established personally. But again, that's me. I don't like to complicate things in that way. You might think that my whole way of looking at the markets is a little bit more complex than some other traders, but to me it's not complex at all. To me, every single part there's only 4 parts. It's not like I have a million parts to it. I have supply and demand on slightly larger time frame that can be replaced by volume profile as well, so you don't have to use both. I have the time of day, so when I expect the setup to appear. That's a statistical thing. I have the market profile as a subset of conditions, and I have the ranges, algorithmic, statistical, expected ranges. That's it, right? And then all of that I just mold into different setups. But the core 4 pillars will be just those 4 areas. So you can use fibs, once the IB is established. I know some people do that. But I don't feel the need to include other things at this point. I have something that works really well for me, and I just don't, maybe minor tweaks here and there, but to add a whole new indicator into the mix to measure things there. Like if I do a measured move, it will be based on the previous move. I wouldn't be measuring extensions based on fibs. I would just be looking at something like, let's get the measuring tools out. Oh God, this shoulder, man. Like now I don't just have pain here, it's sort of migrated to this side as well. I don't know whether we pulled a whole bunch of things, and it's really annoying. So if we're going to project how much higher gold might go, we need to see what sort of pullbacks it's had prior, right? Now, this is the COMEX session, so it's a different session, but let's just use it for an example. Price range. So, for example, let's measure this move. So this was the swing down. When would be a good pullback to enter in on a long based on what we've seen happen yesterday during COMEX? When it makes this move, right? So you would take, so let me see if I can move this. I'm not that great at moving things in Topstep. So actually, let's just do a line because I know how to use that. So this was a pullback. So what would be a good ballpark, discretionary pullback? That size, right? What do we have ballpark that area? We have the POC on a 30-minute chart. So really just looking at that, when it pulls back to 2,800, which I know was a good level before in gold, that would be the place to look for longs, right? Then you can match that with mental Q levels, initial balance, value areas, like anything that you can find around that area that would justify going long with the trend. That would be it. Do I need to place like fibs on this? I don't, because I'm measuring a very simple move. So in that respect, I do keep things simple. I don't overcomplicate obvious things. Or, when people are like, I actually had someone asking me, was there an obvious short in GC, swing short, on the daily chart when we reversed, like the other day, because of the supply? And I'm like, we made an all-time high. And yes, it's a supply. Yes, we had a bit of a range there. Do I want to be shorting against all-time highs? Like, is that the same thing to do here? I'm not going to be the one to short around all-time highs for sure. I'm going to look for pullbacks up to the supply. But once we're already at the supply, the rules of the uptrend say that all supplies will be eventually broken. Okay? All supplies will be broken in a strong uptrend. So to go fishing for something that is a little bit of hindsight capital at this point. So you would be looking at the reversal, for example, the reversal that happened maybe here, and then going, oh, well, that was a good short. That was not very obvious when it was happening. So, because imagine just having this. Let me just hide VPVR for a second. This is what the chart looks like before it turns around and makes the bearish engulfing. So what do we have? One broken supply here. So this will drop, price drop. So we break it, react to it, react from it. Next, we break through it. Not much of a selling wick on there. Would this day be obvious to you? It wouldn't be obvious to me because we made a higher high. Like we're pushing higher. So to me, a more obvious trade would be to fish for longs here. Like, it's with a trend, it's a demand, it's a range. It's like we haven't established something to back things from it. And then look, it starts crawling and that's a swing, right? So being selective over the side that you take your trades with in swings is a pretty important thing for me. And an easier way to look at the markets rather than being a super contrarian and just going always against whatever the market is doing. So I said, no, I don't think that was a good thing. The only way I would have played maybe a punt short is to do a long put, buy a put. And then you have, a few days to decide what to do with it. Obviously, with long options, you do have the theta decay. So it's like the longer you hold the option to expiry, the more it erodes your profit. So I don't really like holding options too long. If I just get the move that I require, I just bail. But yeah, if you're looking for a super suspect counter trend, thing that's going against all-time highs, but you're still like, yeah, I think it's going to turn around. Just get an option. Don't trade futures outright. That would be to me one of those Muppet moments that is like, what are we doing here? Intraday trading should be about quicker mispriced opportunities, not fishing for some big swings that will last you for days. They don't need to. I only need to know where something might go statistically for the next 30 to 40 minutes, maybe a couple of hours. But aside from that, I really don't care. Like, it's not my objective. Let's go through. So Charles, if fibs help you in relation to IB, use them. I just don't. You don't have to do things that I do. Sandy says, what's that options info site that you and Anne-Marie use? It's Mentor Q. Mentor Q. We were actually on, both of us were on one of their webinars a few weeks back. Latoya says, how do I join your VIP group? You can't just join it. It's a random VIP draft. So we already have 50 people in the first round. But if you want to potentially sign up for the future rounds, then just keep entering those VIP forms. I think we're probably done with the VIPs for this cycle. And I think isn't it a 3-month cycle or something like that? Don't quote me on that. But I do know that you get a combine for 3. Yeah, I think it's a 6-month cycle. So yeah, maybe in the next run through, we'll see. But yeah, it's a random draw. So the more entries you have, the more chances you have. But at the same time, it is one of those things where it's like the luck of the draw. At the end of the day, even if you have like one VIP entry, you can still be selected. But obviously, preference will be given first to the people who have had more entries. Cedric says, that's a good question. As a pro trader, do you still sometimes deviate from your rules? Sometimes, yeah. I mean, I can be a total muppet sometimes. It's just that usually the muppetiness only lasts for one day with me. The next day, well, actually already through the day, I'm just like, okay, I'm doing, like, for example, if I've done 3 trades in an hour, that's already outside of my rules. And I go, I'm doing stupid things today. But I'm aware of it. I don't keep doing stupid things. And, I will always keep a smaller stop loss on prop accounts that I can have. So, I could technically have a 3K daily loss limit. I keep it at 1.5. There's no need to lose that amount of money, unless I build this account up to some crazy amounts. But I never hold too much money in the prop accounts. I'm always like keeping below 100K in them, always, like even in my YOLO account, I have about, well, after that trade it's a little bit higher now, but let's say it's about 85 grand. Like, it's enough money to play with at this point. But I do have multiple businesses, that we do have. I've worked very hard to develop multiple sources of income. Most of them are trading related, but a couple of them are not. They have nothing to do with trading. And that makes things a lot easier to me, just to make good trading decisions. When I was just relying on trading income, and I did that for a while. The first year was horrendous before I actually got used to it. So the first year was awful. I went full time. And it was in office, so you had to be there. You couldn't do anything else, and I didn't have any other sources of income. Like I abandoned my music career in 2014. Like, definitely for the first year from 2014 2015, I was just psychologically a wreck. Like, I was profitable. Like, I didn't lose money, but it was very difficult. Like, on the months that were break even, all I could think is like, how am I going to pay my mortgage? Like, maybe not even consciously, but it was just like, oh God, the mortgage payment is coming out. Oh God, the car payment is coming out. Oh God, we need to do this. Like, all of these like bills that you have in your head, they're just like there, and they never leave you. It's like so annoying. And I didn't like having that feeling, right? I wanted to trade free, if you know what I mean. I wanted to trade without a fear of bills. hanging over my head. I hate money. I actually hate money. I don't know whether this is a weird thing to say. I don't want any point of me thinking about money, right? I don't want to go to a shop and going, I like having the security of just buying whatever I need to buy. And I'm one of those people that doesn't even look at the bill. I would just go in, get what I need to get whatever I want to get, and get out. I'm not one of those people that looks like, dollar for dollar, what's going on. I never want to think about money. And maybe that's the reason why I do this, because I don't have to think about money. I think about ticks, I think about percentages, but monetary values to me are just a complete side product of the process. Do I deviate from my rules? Yes, but I drag myself back very quickly. Why? Because I just don't, I don't need to do any of this. I want to. I love doing this, but I don't need to at this point. So even when I deviate from my rules, I think it's not as much of an impact as it would be on somebody who's like, I have to get that payout because that would pay off my credit card, or some stupid reason like that. It's like, if you're relying on a payout of like $1,000 to cover some of your debt, I would seriously look at why you have a debt in the first place, right? So what was the decision that you took where it was okay to rack up a credit card bill of like 20 grand that some people have? And, I get shocked seeing some of the people in my environment who I know are not particularly wealthy and they make peanuts. They're like, oh yeah, I have 7 grand in debt. And I'm like, you make 2 grand a month. Like, what are you doing? Like racking up 7 grand in credit card bills. Like, what could you have possibly been buying to do that? Like, I just don't get it. It's just like completely beyond me. So, living within your means, to me, is a big, big thing at this point. I was never the one to kind of do flashy things and, buy Chanel bags and stuff. I don't even have, I have like 2 bags. One of them is like a fanny pack from Michael Kors that I bought like donkeys years ago. And it's all like worn out and stuff. And it wasn't even that expensive. I think it was like £100 or something. I really don't care about that stuff. Really don't care. And then, I like shoes, but nowadays the only places that I go is to just walk my dogs. So I have, a pair of wellies. I have some nice things called tribe boots, and they were like, okay, a little bit more expensive, but nothing like, I'm going to go buy Jimmy Choos or something like that. So again, maybe that's why I don't tend to deviate from my rules, particularly in any particular way for any length of time. Do I go through drawdowns? Yes, of course I do. Am I bothered by them? No, not at all. And again, it's down to the products. Like, for example, I have multiple accounts, so if DAX is doing well, let's say crude oil is not doing well, but I still have DAX doing really well. So it's like, I don't care. To me, it all kind of goes into the same pot. And I don't really judge anything on like account by account basis. But I do have accounts that are specifically dedicated to particular products. And I also have accounts where I trade everything. So, maybe doing that sort of a thing might help with rules. Another thing I would say about rules, because I've seen a few people say how they trade aggressively in combines, but then they completely have a personality transplant in an XFA. I think that's a bad thing, because I think the more you let your gambling habits and bad trading behaviors take over in your combines, I think it has a knock-on negative effect on how you make decisions in an XFA. I really do. The more, like, that's never going to work. If you trade one way in a combine and then you go a completely different way in an XFA, you don't have enough experience being the other type of a trader to make it work long term. And all you're doing is reinforcing bad habits because you want to be funded, you want to get there quick, it comes back to rushing. So not following your rules in a combine whilst you're still struggling to maintain XFAs. Maybe that's something you're not supposed to be doing. Like, in my opinion, I would definitely say to people, just don't do that. Like, just trade. You can trade with a bit more size in a combine, absolutely, not like crazy amount of size. It still has to be sustainable. We still want to learn things through the combine process. But to just go completely crazy, full porting it with 10 and 15 lots, or even 5, if you trade NQ, that's a lot of cash. Like, your risk of ruin is just like in the thousands and thousands of percent. I'm going to be freaking out if I see that. Like Jay says, I'm going to be throwing some chairs, right? So enforcing good trading habits at all times has to be the primary objective. If you're going to go YOLO in your practice account. If you feel you've got an itch to scratch, don't do it in a combine. Don't do it in an XFA. Get a practice account. Go nuts. Go nuts. And then come back to your real self, right? Go maybe do some weightlifting and then go, phew, okay, did 100 trades today. That itch has been scratched. Now let's go back to being serious. You can do that. I do that sometimes. I get a demo account just for the hell of it, and I just click buttons. Like click, click, click. And then, usually the maximum loss limit is gone in a flash. But I don't do that. Like, I don't look at that as a business transaction. I just look at it, let's have some fun. Kind of like the reversal challenge. It's the same thing. Let's see how long I could trade without a stop loss. Just keep reversing. But that's just a fun pastime activity. It shouldn't be something that you do for real, right? For serious money. To me, that's just not something that will be sustainable. So yeah. All right. Johnny Peroni says, how many times during the day are they updating the gamma levels? Okay, so I use end of day levels. I don't, like, if something goes into a mad trending day, I will then drag out the intraday levels. But for the most part, if we just have a normal day that just like is moving within the statistical averages, I will just use end of day levels. I don't look at the gamma flows. Maybe if the sentiment starts to change, maybe if we go over the HVL, I may look at whether these levels have changed and whether the calls and call strikes and puts have shifted and whether GAX levels have changed. Aside from that, I just use end of day. So I still use TradingView for mental Q levels, and I have to still drag. They don't have an API on there that auto updates, and I actually quite like doing the levels because it makes me more aware of them. And I'm like, okay, let's see where they're changing in relation from yesterday. It kind of gives me an extra awareness. If we had calls that were 2800 yesterday, but today the calls have shifted to, let's say, 820 or something, that would mean that there's call buying and that interest keeps kind of pushing, kind of like pushing value higher with each day. What does that tell you? It tells you that the market sentiment and the distribution curves are shifting higher. Call strikes, put strikes, they're the same thing, right? So to me, I actually like seeing as they change whilst I'm doing it. So I won't be moving to any auto. Like you can't have indicators do everything for you. Sometimes it's actually very good. In fact, I would say that it's better for you to go through the process of knowing how the indicator works and where the other levels were than just having it like given to you on a silver platter kind of thing. And I think that's actually a problem these days. We want everything to be automated. We want profits right now. We cannot possibly wait for 2 hours for the trade to work because you're going to pop your gasket. And then they say, oh, I have no patience. It's not a patience thing. It's more that you're not understanding the value of delayed gratification. In my Marcus Stalker's method, I think it's level 2 or 3, I have this video of a Stanford experiment that they did on kids where they, it's so interesting to see poor kids. It's like they gave them, I think it was like donuts or something. And they told each child, okay, here's a donut. We're going to lock you in the room. If you can not eat this donut, at the end of it, you'll get 2. And then they filmed the kids. And you can see the ones that are like really, because I'm going to get 2. And this was I think it was like decades ago, like a couple of decades ago when they did it. So you see the poor kids are sitting in a room by themselves and they're looking at the muffin or whatever they gave them and they're like squirming and they're really trying their best. And then you see some of the others that are just like, as soon as the door was shut, they just stuff it in their face. Now, after many years, they followed up with the kids that were in the program in that study. It turned out that those that were squirming and really trying hard not to eat the cookie because they knew they were getting two, they did better in life than the ones that stuffed the muffin immediately down their throats as soon as nobody was watching. And it's basically the concept of knowing that you'll do better later, you'll get more stuff if you just control yourself now. And no matter how difficult it is, they're just like squirming, doing everything in their power. They're trying to get, and then one dude goes like this, and they're only like, I don't know, they're maybe like 5, 6 years old, like very young kids. So, one of them is like doing this with the fingers and going, all sorts of things are uncomfortably happening in his poor little body. And then you have the other kids that are just like, yeah, F this. I'm eating it. So those that ate the cookie immediately, they didn't do particularly well in life. And, think about that for a moment. Delayed gratification, right? You get more stuff if you're patient. That's true in all areas of life, not just trading. So what's that worth to you? Do you want a long-term career out of this? Do you want to be doing this 10 years from now and being, somebody who has more resources, somebody who has, no particular, like we all have money worries, and the more money you have, the more bills you'll have. That never changes, unless you get to like extreme amounts of wealth, like, 100 million or something. But, even then you can buy stupid things. Like you can buy really expensive houses, you can buy yachts, you can buy... there's no amount of money that you cannot spend. But yeah, as a general rule, when you have more resources, certain issues in life just are not issues, right? You don't have to worry about security. You are settled. Sure, you will have bills. You will get annoyed with things. Your tax bill will get larger. That will be stressful always. But in general, you will be more calm in life. At least I know that I was once I didn't have those issues. Not that I was ever like particularly poor or anything. I think I only had like 3 months in my life where I was like, oh God, what do I do for money now? But I very quickly kind of turned that around. So I was always somebody who came from a fairly financially educated family. My dad was very wealthy, and we were kind of, especially I as a younger child, I was taught to work for my cash, and that if I, don't spend now and kind of save money on the side, I will have more things to buy later on. And then my dad always tried to instill that in me. But he always said something very good. So let's do one of the Hoag's dad wisdom. So my dad had some wisdoms too. And he said, let it drip from all sides. And I think that's a very good saying, right? So develop, and it's not easy to develop multiple income streams by no means. Like it's so much work, but it's like have it coming from a few things at a time. He was a musician, but then they had some dolls that they were selling. Then they had merch. They had a whole bunch of stuff that was coming in from various things. And then my dad also had a company that had nothing to do with music. He was a very famous musician in Yugoslavia from the end of 70s and throughout all the 80s. And I learned that from him. And it's directly applicable to trading. If you're looking for quick profits, if you can sustain that, if you're one of the very, very few percentages of even profitable traders that you can maintain that level of performance for years on end, all the power to you. But in my experience, those kind of people are very rare. Their performance always slips at some point. And, once you don't have the 70% accuracy, suddenly it goes to 60%, profits slow down, you start to freak out, then it goes down to 55, then to 50, and then you bleed money. And people freak out even more. There's very few traders that I've seen in the world that can go through that and be okay. And the ones that have survived the most are those that kind of have lower accuracy but high risk rewards. And generally they're calmer people. They're not like strung out. We're just like not particularly worried about the outcome because, over time the system works, but you have to give the time the thing to do its thing, right? It's not going to be like, oh, tomorrow I'm going to get out a drawdown. No, you won't. But over time you will, because you have a positive risk reward. But again, that requires mental resilience too, right? Not everybody is comfortable trading with 30 and 40% accuracy, because that means you have to admit you're wrong a lot. Does your ego allow you to do that? Probably not for most people. So they need to be right. I don't need to be right. I really don't care. As long as I get my larger risk reward. But that's my mindset. And that's always been my mindset. I don't have an issue with lower accuracy. Like I said, my long-term accuracy has been around 42, 43%. And in order to make my system work well, I need to maintain a profit factor of over 1.3, 1.4 at all times. However, my profit factor is usually around 1.7, 1.8. And then when I'm doing really well, 2.1, 2.2, 2.3. Okay. So those are some of the spans. Jesse James says, good morning, Dee. Just signed in. How are you processing the FOMC results going forward? There's nothing to process. There's no changing interest rates. So there's nothing to reprice. I posted on Twitter that I'm not going to be doing my post-FOMC NKD trade because there's nothing to reprice. If there was a difference in the interest rates, something would have happened. But, Nikkei, did it do anything? No. Was there an opportunity to do anything? No. So yeah, if we're going to get as close to a crystal ball as possible, that will be it. No interest rate change, no reprice. There we go, no trade. So for me, it's just a normal day, right? There's not going to be any surprises. Maybe, headline risk and stuff. That's always a risk in my products, but I'm not processing FOMC because there's nothing to process. So we go about our day and about our plans as usual, right? There's no need to exclude any technical setups because you think there's something odd is going to happen because of what Daddy Powell said yesterday. So yeah. Christian says, not possible to average out a position on TSX, correct? No, you can. No, you can. All right, let me show you this. Let's grab a practice account, actually. Let me grab some coffee first. With a very elaborate move, because I have very limited movement in this hand. Is this going to kick me out of? No. Okay, good. Sometimes when I log into my practice account, it kicks me out of this one, but it seems like they've sorted that out. Okay, let's move this. Let me drag the practice account around, and then I'm going to show you how to partial out of winning positions. Full screen. Let me see what's moving. See what NQ is doing. And just so that I know what the hell's going on, for levels and stuff, I'm just going to drag out NQ levels for a second. But yeah, I don't know why you think you can't partial. It's very simple. You do have to do it through the DOM. If you're not using the DOM, then I don't know how you would even exit. But I'll show you. Okay. All right, so we have a GEX2 level 21,600 ballpark. So let's see if we can find some kind of a setup. I mean, right now we're kind of going down towards that area. So what I'm going to do, I'm going to pop in a little short in NQ, and let's do 3 just so we can like scale out. Again, you shouldn't be trading 3 in a combine, but I'm just giving a little wide stop here so that we can see how we can partial. So now I'm in with 3 short, right? Aiming for 600, let's say. So GEX2 level, ballpark 600, okay? If this moves down, I will change my dome to 1, and then I'm going to go, so I'm selling, you need the opposite order. So I'm going to go buy 1, now I'm in with 2, hopefully you can see that, okay? So now I'm in with 2, I clipped 1. If it goes further down, you can clip another one. So you have to do it on the dome, old style, and you basically just partial by changing the number of contracts down to what you want to partial at. If you're in with 3, you want to partial by 1, change it to 1, and do an opposite market order to scale out. Okay? So I'm going to see if we can do that if this starts moving where it should be moving, down towards the GEX level. And if not, I can partial the other way as well, because it's the same thing. You're just buying against your short position. And depends on whether you're in a drawdown or a profit, you're either going to rack up losses or you're going to take profits. But it seems like they're still holding below the ribbon. So let's give it a bit of time and then I can scale out if it moves down. But yeah, you can absolutely scale out on Topstep X, but you have to use a dome. I don't use the order tab. Okay, so it's gone down again. So let's do another partial. There we go. So now I'm only left with 1. Only left with 1, right? Now you can have a runner. We're going to go short on NQ, contrarian. So Paul says you can right click on the chart too. I don't like doing that. I think this is all a bit messy and stuff. But yeah, so let's set profit there, 600. Move this down a bit over POC. And then leave it to run, right? But yeah, and you can even close the position now. If I were to click again, this would close out my position. But yeah. So click on the chart, right click, market buy would be what you're looking for a short, and market sell if you're in the opposite position. And then it would be very easy to scale out. But I really don't like doing that. I prefer because I'm a bit old school, right? Dee has been trading for 18 years. So I would be going dome, buy market, sell market, and all that good stuff. So yeah. And now we can just go again, buy market, and now I'm in. Fully flat, right? Make sure all of your orders are out. But I think Topstep X already has the whole order matching. Like if you've already exited and closed the order, I think it just automatically takes it off. But it's always good to check whether you have orders left, just in case you place some extra limit orders and stuff. Yeah. All right, let me go back to the questions and then we can start wrapping things up. Okay. Uwelka says, can you please show an example of your A-star setup on CL? I mean, not right now because we're not in the prime time. So my A-star setups on CL only happen after 9 a.m. Central, 10 a.m. Eastern, and 3 p.m. GMT. So I cannot show you a star setup because it's the wrong time of day. I don't really have any star setups on crude oil for the London session because it's not really something that happens all the time. And in fact, any sort of a setup on crude oil that I like to see is very rare during London. But yeah, maybe I can see what's happening on DAX. I do feel like we're in a bit of a hangover mode today after FOMC though. Because, where's my DAX chart? Because we had, some big movement yesterday and you can get like reversals like in crude oil after the big days that are equally large and pretty much eradicate whatever happened the previous day. But right now I just kind of feel like we're in a holding pattern on DAX and just equities in general. But yeah, let's have a look at this chart. Yeah, it's nothing happening. We're still inside initial balance. So maybe rather than me talking about this A-star setups, I can also talk about the crappy setups that I definitely stay out of. One of those is when we are still inside the initial balance, building structure at G period TPO. We have Dalton today. I kept getting the times wrong throughout this week. I'm like, Dalton is coming tomorrow. Dalton is coming tomorrow. No, he is definitely coming today to talk about market profile, about his new book and what he's changed. Hopefully, I know I'm going to be shooting him loads of questions and really hoping that Hogue is going to notice me. If not, I'm going to start texting him. I'm going to be really annoying with questions just to, to see which parts and, what changes he's made. Like, I'm so excited. It's like, I don't know whether you can tell. I'm super excited for Dalton to be there. Now, I know that parts of the profile I've modified was because I didn't really find very much success with certain areas of it. And I know that the markets have changed drastically. So I spoke about the value acceptance where in the initial books, he asks the trigger signal to be 2 TPO closes, and TPOs are basically just 30-minute candles. So he wants 2 TPO closes inside value. And whenever I try to do that, I miss the entire setup. So I modified that to only have 1 close inside value. So 1 30-minute close. An example of a star setup, I suppose we have something here, but I don't like the fact that we're still inside initial balance. But basically, one of the star setups would be to look for the outer edge of the value area to be retested, outer edge. So what does that mean? It means that we open outside of value. Then let's say you have a strong uptrend. Value high gets reached, and then we reverse, go into a failed auction. So that would be an example of a star setup that I would want to see. Now, keep in mind that star setups are not going to appear all the time, right? Do I trade star setup exclusively? No, like half of my setups are like punts based on statistics and situational awareness that I've noticed happening every day. So if I have a neutral day, if we have extensions on both sides of the initial balance, the highest probability setup there is to wait for the established swings, even post the neutral day creation, to get taken out. So all those silly little stops that people place right above, they get taken out. That's what I wait for. And then I wait for a reversal. Is that a star setup? Yes, but you can't do that on a trending day. So it doesn't apply, right? So you have to apply the right strategy to the right type of a day. And depending on the type of a day, I will have different star setups. But what's my absolute favorite setup that works like probably 80% of the time for me? It would be late day reach of average session or daily range. And if we also happen to have the previous day value, outer edge of value, that would be like smashing. How many times have I seen that happen in the last year on any product? Not many. Because you need to have a big move up and down, right? So you need to have a big move overnight, and then a big move down, and then yet another move away from it. It's a rare day when that happens. So really, I maybe see that setup, a few times a year. And that wouldn't be very good for intraday, right? So we need to trade setups that are in front of us and not necessarily only take the best setups, because you'd never trade. And I know that from an algorithm perspective, if you set it with only the best setups, you're sitting there and just like, it's not doing any trades. Is there something wrong with the code? And then you just start spinning. And then everybody's like trying to find why it's not opening setups. And then you find that it's just so selective that there's no setups for like weeks on end. Now that's not intraday trading, that's swing trading. So you as a manual trader have to be a bit more flexible. Not all setups will look perfect, but they will be perfectly valid, if that makes sense, right? But we have to take in the day type for that. How do you work through your drawdowns? I limit the time of day that I trade. And then I try to only trade for 90 minutes at a time and be done with it. I also aim to do between 1 and 2 trades in that space. And I will wait for the highest probability. So it was actually Brett Steenbarger said something about that. He said traders that he works with, when they're in a drawdown, they become extremely selective. How different is that? How different is that? Because we have traders in the combines that do exactly the opposite. They get into a drawdown and they start overtrading. They start foregoing selectivity of trades and locations, and they start clicking buttons. How different, eh? So to me, I do the opposite with the lockout feature. Like for example, today I've got a lot of things to do, and I'm a bit drugged up from all the muscle relaxants that they've given me. So I know that I'm not going to make good trading decisions. So I want to only trade towards the last 90 minutes of NYMEX. That's why I locked up my personal account. So that's the only time of day that I'll be trading today. And I've given myself no other options. I've locked up other accounts, so I won't be trading DAX either. And I'm just going to go do something else. I'm probably going to go play video games, maybe walk the dogs again. But yeah, limiting screen time, limiting number of trades, absolutely sizing down. Absolutely sizing down. Okay? And the only way to get out of drawdowns is patience, 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 limiting yourself from doing muppety things. Otherwise, you're just going to blow up the account and you will not be at a funded level or in a combine without a reset for very long. The objective, once you're in a drawdown, is to make sure that you keep on top of your own behaviors. There's nothing to do with the market. Because the market can be like trending and you can be in a drawdown, right? It has nothing to do with the market state most of the time. Sometimes it is the market. Like, for example, my drawdown from last year in crude oil, it wasn't me not making it. It was just like the market completely drying out. And I wasn't the only one who had that issue. We had multiple crude oil traders who were like, what the hell is going on with crude oil? We went from 400 ticks a day, 220 on average, but then, you'd have a lot of days when we'd go 350, 400. And now a good day on crude oil is considered like 120, 140 ticks. It's like, what sort of a twilight zone did I fall into here? Like, what's happening? And I've been trading crude oil at that point for 12 years, coming up to 13 now, right? 13 years of watching crude oil do the same thing over and over. And then 1 year, they're just like, it's election year, we're not going to do anything. But interestingly, I actually had a drawdown in crude oil for the previous election year as well. So I've said this before, maybe there's something to it. Maybe they just decide that it's too much risk and they don't want to trade it out. Don't shrug, Dee. They don't want to trade it until they know the outcome of the elections. Why it lasted the whole year, I don't know. Seems to be kicking up a little bit now, but I still wouldn't trust it until the OVX is confidently holding above 35. That is my primary thing to look out for. This is TradingView. I do pay for, I don't need this, hold on. I don't pay for the volatility indexes elsewhere. You have OVX directly on TradingView. It's like really not that expensive for retail traders. I think it's a couple of bucks. I have to pay a bit more because of the professional thing. Because when you're a Series 3 license, you're automatically a professional trader. So sadly, it's a bit more expensive, but it is what it is. So yeah, we flirted with 35. We flirted with it. This is a daily chart. But for now, anytime we go over 35, we quickly just go, wow, and we're not really holding. If it manages to hold at these levels and then kind of starts creeping back up, 36, 37, I will consider putting it back on the tradable products. Until then, it's nothing more than a confluence. All right, final question for the day. I have a question. Gigi says, I have a question regarding gaps. Example now in ES, that the market just needs to touch the gap or fill it totally. We don't know really. I mean, ideally you want to fill to the close, So the gap is always taken from the previous market close. So then if you had, let's say, weekly close, and now you have that gap in ES, that gap is considered to be closed when we reach 61.31.75, right? So that will be it. Right now it's accumulating. So I would say this is actually bullish and that we will be closing the gap at some point. Are we going to close it today? Probably not one day post FOMC when there was no rate decision change. So I doubt it that it's going to happen until into the end of this month, unless we get like some portfolio rebalancing on the last day. Oh, actually, I want to talk about that because I'm not going to be here tomorrow because I only run these Monday through Thursday. It's the last day of the month tomorrow. You can absolutely have weird unwinding moves, either up or down, across the board. So if you find yourself like looking at single prints at a strong close below or above the initial balance, whatever you're trading, that could be the sign of position unwinding for the end of the month. So try not to go against that. It doesn't end well. It's one thing that I've noticed. Last day of the month offers, not always, obviously, but sometimes when you see the move happening. If you see a committed move, don't go against it on the last day of the month, because it is unwinding positions, and kind of like the FOMC, none of your technicals will work. I know that Paul locked up his account yesterday, and he ended up only trading, outside of the FOMC, and he ended up 1.5K on the day, I think. So that was amazing. All right, I'm going to wind it down now here because wow, I've been talking for the world. So yeah, let's wind this down and let's go watch Dalton today. That's going to be super interesting. Thank you for being here with me. I'm going to be on here on Monday, obviously, as usual, for the London session. I will be on with Paul H as well next week. One of the days. Is it Tuesday? I have to look at my schedule. But yeah, it's going to be a great week next week too. And we're going to be kicking off the coaching for the VIPs and all of that good stuff. Oh my God, guys, I'm so excited. Yeah, thank you for hanging with me. Hit the like, hit the subscribe button if you're not already subscribed. And let's continue to set some good trading habits and to make sure that we make 2025 the year when you tackled some of your pesky trading gremlins. So let's be less grasshopper, more market stalker with every passing day, as I like to used to say on my own channel. And thank you for hanging. I'm Market Stalker Dee, aka Deeyana Angelo. This has been the London session on TopstepTV. Take care.